Your market news now. Asian stocks sold off and the dollar scaled an 11-week peak against major peers. This comes as investors brace for the risk of a hawkish tilt from Federal Reserve Chair Jerome Powell at Jackson Hole. Nerves ahead of Powell's speech at the Fed's annual retreat for global central bankers, including the Bank of Japan and the European Central Bank, have encouraged traders to cash in on the tech-led rally. Meanwhile, Northam Platinum declared a maiden dividend in its annual results, despite reporting a profit fall that was sitting at almost 3/4, adding that it will embark on a share buyback program of up to 1 billion rand. The Platinum Group's metal miner said that accepting Impala Platinum's cash and share offer to buy out its near 35% stake in RB Plats had significantly strengthened the group's balance sheet and liquidity position, which enabled it to declare its first dividend in over 10 years. To give us more perspective on the markets, we are joined by Zwelakhe, who is from Benguela Fund Managers, to give us a little bit more perspective on the markets. So Zwelakhe, thank you so much for your time. I mean, how are you characterizing sentiment right now ahead of the Fed Chair's Jackson Hole speech, which we are expecting just after 4 p.m.?
Look, I think the market's a bit nervous, and I think, as you said, there are investors that are looking to take some profits off the market. But certainly, there is a bit of nervousness about the path that they could follow. I mean, is it going to be a halt, and then maybe the next step is going down, or is it going to be a warning that they will continue to follow data and basically there could still be one or two more hikes? I think the market's not sure about that, and I think there's a bit of caution in the market.
All right, we'll go back stateside shortly, but let's look at what's happening locally. We had results coming out of Grindrod, Spur and Northam Platinum. Which of those companies caught your interest?
Look, I thought Northam's performance was great. I think the improvement in production at the Bosendal operations, and they continue to do the expansion on Zona Einde, and the production came through strongly. I mean, amongst all the things that are happening in the sector where commodity prices have come down significantly, they have actually been a beneficiary of a major ramp up in production. And that has enabled them to, as you said, I mean, declare a maiden dividend in 10 years. It's been a hard slog. But they also, their debt levels have been reduced significantly. So quite a positive set of numbers. I think one thing that almost disappointed investors was their foray into the RB Plat transaction that actually lost them 8 billion. But I think it's good that they are out of debt, and we've seen them committing to buy back dividends.
And with regards to Spur, was there anything there that should make investors happy?
Look, I think the recovery continues. I mean, I have to warn that the Spur share price the liquidity is very low on the Spur stock, but certainly the performance has been very strong. I mean, they seem to have had quite a strong growth in revenue and also in profit. I think their profit was up about 75, 76%. The highlight is that the second half was a little weaker than the first half, but they did 15% growth in the second half versus the first half. I think they did over 35%. Again, the highlight there is that we're starting to see a normalization of the post-COVID recovery, and we can expect like more stable or at least more normal numbers going forward. But they did get some good inflation through the numbers. They did get some volumes back in the market.
What do you believe is leading or dictating markets in the short term?
I think the big thing in the short term is the direction of the global economy. The second thing is the interest rate direction. I think those two factors have been major influences of where the markets are going. So in particular on the global economy, I mean, that affects predominantly the cyclical companies, the resources companies. So the fact that China has not been importing as much commodities as they have been in the past, I think that's been a cause for concern around the commodity stocks owners. I think the interest rate, broadly speaking, they curtail the amount of investment that goes into the economy, but they also curtail the amount of consumption that happens in terms of the consumer spending. Oftentimes, consumer spending is over 50% of the economy. When consumers slow down, that basically, or at least they are forced to slow down by the rate hikes, that actually has a big impact on the economy. So I think those two factors have been major in terms of driving the direction of the markets. But I think if one looks beyond this next 6 to 12 months, the numbers should actually start to come through. I mean, the South African side, you should see that the forced investment in renewable energy is starting to create a good base for us to operate from. So we're not falling in terms of our production, in terms of our sales. We should have a good base from there. And then we should maybe hopefully get an uplift from the economy as we move forward.
On that note, then, what's your assumptions for interest rates if you look at it both from the SABC's perspective or at least the Fed?
I'd probably say we plateau now on the SABC side. So South Africa probably will stand pat, no hiking, probably monitoring to see how we are. And the reason is that inflation has come in below the target levels. And I think the rand, after a few blowouts, has kind of pulled back a little bit, has strengthened a little bit, if you say month to date. But I think they would probably still be cautious, warning that they could hike if there is a spike in inflation, particularly because of inflation of the grains, as we saw what happened in the Ukraine. I think the US, the economy is still relatively strong. I think that they might skip this hiking point, this meeting, but the next meeting, I think they might do 25 basis points because the labor market remains very, very strong. And oftentimes that is an indication of a strong economy. So we're likely to see them maybe hiking by 25 basis points in the next 2 meetings.